Greetings, my fellow warriors. I want to make this video about the short sellers and interesting stuff, what is happening or not happening. So, as we know, they have shorted our stocks day after day for a very long time, and it is possible. Like there is a couple of scenarios. What is the cause? First, they want to make the money. That is the cause. These are basically two reasons why you want to short the stock. First, you accumulate enough position in short, and then you do the short attacks in order to decrease the price by to cover. And there is another option that if you want to buy the big quantity, you buy big lots and then but you take and sell short in order to decrease the price, so you decrease the your buy average, and they do that effectively. But what happened yesterday is kind of surprising. Usually we see those shorts attacking every day and all day, and if we look at the chart of Fannie Mae yesterday, we can see that, for example, here was a short attack bank, at the beginning of the day. Probably today we'll have the same, and right now while I talk it's 9:37, so it is most probably happening. And price recovered, and they done it again, but eventually they stay without the money, and we see that just pressure up. It is the question. I think that they have like allocated, okay, every day for shorting, unless it is like serious problem, you can spend, and because that shorting costs them money, you can spend, let's say, like 10, 20, $50,000 to decrease the price. If you fail, buy. You cannot do it anymore. Like probably the boss, the supervisor, whoever told them, okay, you can cut up to that limit. After that, no, we'll not give you the money. End of the story. Uh, that might happen. Like, but so the bigger question is, will they have the money today? I probably think that they will, but not as much as yesterday. And if but if they see that their position is very, if they have like large short position, uh, and they see that they are losing a lot of money, they will probably try to make a big short attack, or they maybe, that is one option. The other option is that they wait that Bill Ackman spend the money that he planned to allocate from his IPO into Fannie Mae and Freddie Mac. But what we see now is this, the price goes up and they short it, the price goes up and they short it, the price goes up and they short it. If you look at the time, for example, here was, come on, 11:29:30, something like that, and look at the volume. And why I think it is a short and it is not a sale, because of this. When they do the short attack, they take and sell a large amount of small lots very fast, and that decrease the price. And come on, oh no, I want 5 days. Okay, so and volume. So we saw that. So this was a big buy, but after that we had like small sales when they try to cut the price, and that is what they're doing. When you magnify it, wait, I want a 1 day, 1 day, because it is better visible. But if you look at a real time, you will be able to see it. No, I didn't see it anymore because of the, yeah, it started trading this day, but you cannot see the yesterday. But what is important that when there is big buy, they have a lot of small sales in order to push the price down. And so that is the difference between when you want to enter the position. If it is like a big hedge fund, like let's say like Bill Ackman is doing, and he knows the SEC watch him, and he's very cautious not to play around with the manipulation. He cannot buy a large amount of small shares, or he can, but not so much and so often. Like if you want to enter like 10 million position on the for the stock, you cannot. You can, but you're not supposed to. It is so obvious that you take and make a thousand lots positions very fast. You're supposed to buy at least like 20,000, 50,000, 100,000. It's maybe with a limit buy, and that's how they're supposed to buy. That is how they're buying. But the short sellers are doing different. They can sell small lots very fast, bam, 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 to decrease the price. So that is not entering position. That is actually price manipulation. Does the SEC see that? Yes. They saw that for years, and they done nothing. Should we expect that they will do something about that? I wouldn't bet. Like I only hope that maybe that was like in a gray area. They're not supposed to do it, but they're doing it. But hopefully they will change the rules or something like that. But I don't believe they didn't up to now. So whatever we have is what we have now. But what is going on and what is very important, yeah, when you take a look at the last end of the day, for example, almost every day, like Friday, you see the price was stable, 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 and in the end it dropped. Then we see the Monday, the price went well, last 30 minutes down. Tuesday, last 30 minutes down. But yesterday, Wednesday, it was like short attack, buy, short attack, buy, short attack. They stay without the money, and we don't have the short attack at the end, last 30 minutes, because they don't have the money. So they're like really close to the close to exhaustion, the short sellers. um, and as I said before, I believe that their average price is right now around 850. My opinion, I think even less, maybe even $8. I remember when it was like around when we have been around 16. I think that their average price, you can see by the price movement. They you can see when they're like when they're aggressive or not aggressive. Like, so when they're in a panic, for example, there is like few guys who are like short sellers, or short sellers pay them to try to manipulate the price with their opinion, actually paid opinion. uh, Will guy, Willan, whatever it was, basically, like when we have been 16 and stock price start to fall down, let's say around 10, and it went like 11, 12, he start to post, and probably it is like paid post, and to in order to try to push the price down. So and when the price went even lower, like, and when it came back, so for 12 it went back, it went to 8, then to 10, he will start to. So that's why I think, for me, it is he's the litmus test. If he trigger and start posting something, that means that they're in the panic, like, because they need to pay him, like, let's say 10, $20,000 for his post, and they're ready to pay when they're in the trouble. They don't pay, like, for they don't give him the money. Okay, like, we are all good. The price is going down. Let me pay you something, so that you post. No, they pay him when they need him, and them. It's basically a couple of people who have like some kind of followings on the Twitter or some other platform, in order to post the text or to create the something else. So what I would like also to talk about, that story with a short position at this website, OTC Short Report Company FNMA. You can see pretty good um, difference between the buying volume and the short volume. and it is tracked daily. So you can see that sometimes the buying volume is much bigger than short volume, but it is normal that they go together. A certain percentage of the stock is traditionally in a Fannie Mae and Freddie Mac, followed by short position. So regular volume, short volume. But last day, it happened this. It started to diverge. Then this they don't have any more money to short. Here it was small volume, and they didn't short a lot. Like on this level, like 5 million shares, they are supposed to. Like on 5 million, they're supposed to short like 3 million shares. In this case, on 5 million, they shorted 1 million. 1 million times $8. What is the price of the share? That means that most probably they have in the funds like $10 million in order to short the stock, and then they don't have any more money. So that is what happened. In case that they have, let's say that they have position of $10 million, and they have like, no, let's say even bigger, let's say 50. Let's say they are in a short position of $50 million, and on a $10 million they're capitulating. That means the price of the stock needs to raise 20%, and they will be in a deep. They will not have this money to short. They will probably have from the other sources. They will sell something else. It's not that they don't have the money, but they don't have the currently money allocated for shorting the stock. That doesn't mean that they will not do it today. But no matter what, we are in a good position with this price level, and it's regarding their activity, the activity of the short sellers. We are ready to jump up. So we'll see how it is going on now. It's as we see now, it's 8:30. It depends only what is the close. Intraday completely doesn't matter. That's why when that is why there is short attacks at the end of the day. But I didn't calculate how much it was. I will try to follow to see like last hour what is the volume. Based on the last hour volume, I know what is their how much money they are ready to commit to short the sales. And if it is me, and if I have enough money and extra money, I would trade during day, but in the last 30 minutes, I would put the buy order, the buy limit order on the price I want. For example, now it's 831, 832, and I would put limit order on 830 for the amount of the share they usually short during that 30-minute period, and so they don't decrease the price. I wouldn't, because why it is important. Look, yeah, it is like short attack. This is like, and look at the volume right now. The volume is on the when we go up, it's big volume. When we go down, it's small volume. Um, so it is like completely automated traded system. But the last 30 minutes is what is important. They to create the limit order on the amount. What is the average, or a little bit more short selling attack at the end of the day, and that should hold the price. For example, if it is like, let's say 8:30, I would put limit order on 8:28 up to end of the day, just to hold the price that was acquired during the daytime. So we're good. As I said, like just to avoid these dips at the ends, because that is what is important. What is deep in the end? Okay, this one is not. It's Sunday, Monday, yeah, and we had good news in the midtime, but just to avoid that. So we are good, we are solid, and we'll see what is going on. But as I said, like in the previous videos, this is like historic events what we're looking, and we see just the surface of the water, but below the water is a lot of stuff is happening. But it is interesting stuff to be alive. It is interesting stuff. Time to be invested in Fannie Mae and Freddie Mac. Literally, we are part of the history right now. But who invested? Like literally, it is like the moment. I'm not sure what is the moment right now. Is basically a level of the moment of. I'm not sure is anything so significant. Yeah, level of the moment of Big Short, like or like something what will be remembered. And it's not that they will make movies about us, but but it's not that big moment. They will make the movies not about us, but about the Bill Ackman Bury and probably those shorters who are doing this, and about the Trump move to remove Fannie Mae and Freddie Mac from conservatorship. So, but enjoy the ride. Stay well, my friends.